Last Friday, US nonfarm payrolls for December not only exceeded forecast by more than 1.5 times, but also pushed the US dollar to new heights. As a result, the greenback reached its two-year highs. Thus, on Monday, trading began with the US dollar at around 109.62 points. Meanwhile, markets predict that the US Federal Reserve will pause rate changes at meetings in late January and March. For now, let us focus on the macroeconomic data that is slated for release in the next 2 days. We will try to find out its potential influence on currencies and oil prices. You are watching Traders Calendar for January 14 and 15. While upcoming reports are unlikely to significantly challenge the US dollar's leading position, they could steer volatility for its trading pairs. For example, the Australian dollar might experience increased volatility on Tuesday following the release of a consumer sentiment data. The index is a leading indicator, and for the past 2 months, it has dropped considerably to -2%. Other important reports include US producer price data, which is expected to rise from 3% to 3.2%. On Tuesday afternoon, the greenback might test new highs against other currencies. A strong dollar continues to pressure oil prices. However, crude oil remains sensitive to inventory data from the United States. On Wednesday, the US will disclose 2 reports on oil stocks. The first one will be provided by the American Petroleum Institute. Over the past 2 weeks, the API has reported significant declines in reserves. And the second report, which will be issued during the US session, comes from the Energy Information Administration. And this report offers a more precise view of crude reserves. Analysts foresee a further decline in inventories, which could potentially boost oil prices. Wednesday also features key inflation data. In the United Kingdom, inflation may rise higher. Thus, the indicator may climb from December's 2.6% to 2.7%, the highest level in 8 months. The British pound is likely to strengthen against this backdrop. The euro's position is unlikely to change much compared to last year. The single currency remains under pressure due to the weak economies of EU member states, particularly Germany. However, the GDP growth forecast for 2024 expects an improvement from a -0.3% to +0.2%. While this figure might provide a slight boost to the euro, there are unlikely significant strengthening. Further challenges for the euro may come from industrial production data, which may really drop from a -1.2% to -1.5%. If the predictions come true, the euro is unlikely to become even weaker. On the same day, the US will release another set of highly significant reports for the Federal Reserve. That's inflation figures. The annual inflation rate is expected to rise higher from a 2.7% to 2.9%. If this forecast proves accurate, the Fed will gain yet another strong argument to maintain its rate pause. Meanwhile, the dollar's position is likely to strengthen even more. Numerous central bank officials will also speak over the next 2 days, with Philip Lane of the ECB and John Williams of the Fed scheduled for 2 appearances each on January 14 and 15. Please note that the time of publications is set in a GMT +3. The next video review of Traders Calendar will be released on Wednesday, January 15. And now, we wish you profitable trading and see you soon.